Hey Alexander, this is Ryan with TrendLizard.com. Thanks for sending me an email, and thanks for being a subscriber at TrendLizard.com. You sent me the email asking for analysis of GDX, which is the Van Eck Vectors Gold Miners ETF. We've taken a look at this guy before in past analyses, and I will take a look at it for you again. So we're going to start at its inception back in 2006. Kind of had a little bit of a recovery there, tanked in 2008 in the financial crisis, recovered to a new long-term high marginal, and then tanked back down to that low. So it's been really pretty intensely back and forth. It's obviously a huge range, but the implication to us is that the pullback that's taken place basically since 2008 is one large ABC decline, as you can see from this labeling here. Since then, it's been in a nice recovery off the, looks like, early 2016 low, and has more recently in 2020 been in a very sharp, nice recovery that has set a new multi-year high in the process. So what's happened off that 2016 low is currently a three-wave advance. It had some big swings back and forth in 2016 through 2020. That looks like one counter trend ABC pullback into that 2020 low, and now you have this nice recovery that's been going on since then. So the question that we have to ask is this the start of a new five-wave advance that's on its way to new long-term highs, or is it just part of a larger counter trend sideways move that may continue for now, but then reverse back down and continue after it completes this three-wave advance? So let's dive in a little bit closer and take a look at more proximate price action. This is what's happened again off that 2016 low. You can see that the whole move is one big three-wave move currently. So the big question again is this the start of a new uptrend, or is this just another three-wave move in a very large counter trend pullback? That's a pretty tough question to answer right now. We just don't know the answer. What we can do is kind of draw some lines in the sand to show you what it needs to do to remain bullish and to avoid making this large recovery off the 2016 low a counter trend move. And the biggest thing, and unfortunately this level is not super close, but it is what it is. That's kind of what happens when you get a move so quickly where price more than doubles. Your key levels can't be super close, but the key level that is most important on the GDX chart is 25. So if at any point GDX moves below 25, this entire recovery off the 2016 low becomes a counter trend move, and that would be a bearish thing. There's no way you'd want to own GDX if it ever does that. Let's zoom in even further, and hopefully we can get a little bit more detailed analysis and better key levels to watch. Here we go. So here's the recovery off of March's low. Let's zoom back out. Again, that's just the big sharp 2020 recovery that's been going on. This is it. It looks like a nice trendy move, very much so. You have the nice first and second wave, and then a nice five-wave, third-wave advance. And then you have what looks like a counter trend pullback from here. And I'm going to show you a variation on this, but I'm going to tell you exactly the key level to watch to kind of discern what exactly is going on. To me, it looks like this is a three-wave move here. It looks like it's all just part of a fourth wave that's been in place since April. And if that's the case, it means that we're in a fifth wave now. So if that's the case, then it's getting closer to a high, and a move below 34 at any point in time. Now this is our new key level that we need to be watching, and probably the more important level or more practical level that we can use. A move below 34 at any point would indicate that this up leg off of March's low has completed, and at the least a counter trend pullback, likely down into this yellow support area, is going to occur from there. So if you're not wanting to sit through this thing through thick and thin, 34 is the level that you want to be watching. A move below there means that this big up leg off of March's low has completed. Now let's take a look at a variation of this possibility here. This is it. The other idea would be that it completed a five-wave move and then had a three-wave pullback, and now it's in a new up leg starting from here. Again, the key level is 34, and this is why if you own it, you want to continue to own it as long as it's trading above 34. This is a reasonable possibility. This three-wave pullback is pretty short. It takes a little bit of creative labeling here to find a way to make this fifth wave possible and trendy, but this pullback was fairly small, so it's hard to be 100% confident that this is what happened. Either way, the key is 34. If it moves below 34, it tells you that this more bullish labeling of the advance off of March's low is not happening, and that more likely you're looking at something more like this, where the 5-wave advance completed, and that opens the door to a much larger pullback from there. So I hope that's helpful, Alexander. The key is 34. Remain bullish on GDX as long as it's trading above 34. A move below that level tells you that some type of larger pullback is at hand, and you more than likely, unless you're a very long-term investor, want to get out of the way, because that brings with it all kinds of risks. So I hope that's helpful. Thanks again for being a subscriber at TrendLizard.com. For anybody else watching this video who would like us to analyze ETFs or stocks or anything else for them, come to TrendLizard.com, sign up, and I'll do this for you as well. Have a great day.